Welcome to TradeTheNBA.com. This is John. This report is for the 7th of December, a day that will live in infamy unless you're a millennial and you don't even know what that means, which if you ask people under the age of 20 what that day means, they don't have a freaking clue because, well, that's just the nature of today's education. And without education, you get the retardations that seem to follow a lot of people who can't seem to read a chart effectively. Well, in this particular case, we ended up with that strong DOC spread that started when we broke the 50% right here. We were talking about those levels before, and we proceeded to break through a lot of the significant ones. And then yesterday was a fantastic day. As we broke the 23, obviously the sell signal was clear from a DOC standpoint all the way back from over here, and it just got worse as time went on. But we were in this massive decline, and I was doing a little coaching, and it was interesting because I like to refer back to these daily levels every once in a while. When we got down to this 2635 and broke below it, I was like, well, that only leaves the 2600 or that 2603 0%. But I said, if we get back above it, that's going to be fairly bullish because it's going to attract a lot of institutional guys who want to buy at that particular zone. And sure enough, once they hit it and started going, it created the inverse effect of mass short covering. Now, given that beating that the DOC has here from a weak standpoint, do we expect that 23 to hold? No. So when the break of the 23 to keep going, and you can see that's what's happening right down minus 20 on it. Whenever you get this kind of sell volume situation, it's always faster to the downside than to the upside on the general move, because as we've talked about a billion times, markets fall 66% faster than they rise. But it's a strong short covering situation. It just doesn't mean that there's going to be enough to sustain it, because once they go through all that, they've got to hold these key levels. And with this kind of signaling from the DOC, you really don't have confidence that that's going to be the reversal per se. Now, that said, again, we still have, oops, I didn't mean to move that, the 23% at 2683.75. That's the turnaround point. So you just, you can mark them on your intraday chart if you need to, or you can just reference that from a daily standpoint. I like to look at those usually at the start of my day just because it's a nice reference point. Now you can see the significant power difference. The NASDAQ outperformed significantly the S&P well above the 23. In fact, it's just now coming to the 23. So that little bit of split divergence gives a little bit of an interesting relationship. If we look at the NQ's 23%, 67.51, right at it, fluctuating right up against it. Euro holding in its nice even tones right here. They're supporting it anywhere around that 114 range, and that has been popular despite all the unrest in France and continued sluggishness. The easing of Fed policy could give the euro some strength because obviously the huge flight to quality has caused a ridiculous climb in treasuries, which is not supported by the underlying interest rate reality, but that's okay. Reality is only relative to what the trade is, because that's where price is at. Though those imbalances tend to get corrected, and when you have them, it becomes an opportunity. USO, again, with the break gap, you can see developed a strong buy from right here. We just know that's not sustainable at this kind of shakeout level. So any pop is not going to last. Of course, they did have that record find of shale oil. It was a massive amount. I mean, it just no end in sight. For all of the doom and gloom of the 70s that said we were running out of oil, here you are in 2020 range, and there's plenty of oil. So much for that. and gold, maintaining this elevated area because the systemic risks of debt, everything else, is starting to become more apparent to people as we go forward. So let's talk intraday mayhem. This is where we're at currently. Let's just mark it. What the heck? DOC spread, wrong color, because I was doing some work on 50K charts with these strategies, but that's for another time. Still, even when you get a signal like this, you're going to get some up and down. The nice thing is that it stopped slightly above the 0%. You've got a very defined risk ratio. Expectation on this? Well, geez, pick any one of any of these positive extremes going all the way back through here. Here's the start of them, and that's usually what I'll look for. So I'll take an area where I have like these cyan ones. Let me just go ahead and lift this up so you can see it clear. So right here, okay, this would be a primary one to focus on right after this yellow one. That one, those had already been filled pretty early. So next level, right here, boom. All right, well, we took that one out of the 79, so then you can scroll back. Here's the next one. Boom, right here, just filled that one. So then it's just a matter of scrolling back and saying, hey, do I have others? You ended up with that next plateau. So you pretty much filled back in all those breakout ones from earlier. But we got to go way back because this was a monster of a day, and we were marking all of these setups as they were coming through, and it was really good. Let's scroll back even further. I mean, that just shows you what a massive range that we had. So here was the previous marking where we ended up with the start of the short spread, then the DOC spread in full, big drop, just created massive gains. It was fantastic. And this is the thing about volatility. If you're afraid of volatility, then you really shouldn't even trade, because that's where you make the biggest outsized returns, because the signals are clear and you get just that much more of an exponential movement on this. So after the huge decline came up, hit the 50%, well, at this point, you're still all the way up here, no reset. Any buy signals we get here, we know are going to be short-lived. Now, that doesn't mean they're not going to bounce a little bit, but they're not really strong. So when you see a situation where, my favorite little one that I've been talking to you about repeatedly is this setup here where you get the crossing of lines. So it's the green below the red, and then the steel crosses below, well, in this case, cyan and orange, but in this case, cyan above both of them, meaning, short's really active. Beautiful run down. And this was, significant. We're not talking a small number of points. From 79 to the 0 at 40. So from, basically 80 to 50. That's 30 points. You could spend a week on a slow day trying to get that. All right, so you ended up with the little buy signal at a fairly decent shakeout, because at this point you're just slightly below the negative 13. It's just a matter of looking for any little secondary pop or weakness. In this particular case, we ended up with a nice little dip that came down to the 0 level, and you still had the green well above in that. So the expectation that would at least make you somewhere near the 23%. Was my guesstimation. The problem was that you got to the 23% and you produced this exact same signal. Green below, and then the crossing of those key elements all at the same time. Now see, the reason we look for it at the same time, because you could say to me, oh, well, the orange and that was still above and they separate. Yes, that still expresses some weakness where you have the cyan going and the green moving below. But that's more a continuation of what this is telling you, which is a momentum move. And if you want to see momentum in the market, you merely need to look for those kind of situations. Same thing with this buy signal. Because you could say here, oh, I'm in a bullish mouth with the steel above orange net. Not when you're in this kind of a continuation down move. You needed to have had the reset of steel to come below red and close it off like it did on that previous one, that lets you know that at least that's over. Or like right here where it ends, it's like, okay, I've got steel below now. That means that the overall short run over, up until this point, no, it was still a continuation. So from this buy signal, when it's coming wrong, so okay, I get another key DLC spread right at that point. There's the same steel cross below. At the same time, you're having cyan move above, and obviously the green dropping below red. So there's a little bit of a combination of them that can take place. You can see that that one didn't have as strong a momentum because you didn't get the orange cross at the same time as well, because orange was already above that cross of the green, and that happened a few bars earlier. So even if you were like jumping the gun, you still would have been right at the peak. I mean, not even significant what you would have suffered from a upside down from 66 to 67 and a quarter. Oh, that's devastating to be upside down by 1.25, and then to go from, again, right here at 67 to making new lows at 44. So 70 to 45. And you just start looking at the racking up of these numbers, and it's like, all right, when I'm locking up 70, 80 points, even if you miss a few, you're still doing fine. Likewise, same situation, crossover, boom, momentum. Now, this one dropped a little bit and then kind of traded sideways, so it didn't have that follow-through effect because you didn't get a continuation of the separation of the green and cyan. So it moved to zone, well, it moved to, in this case, one zone full. The signal actually came really at the beginning of the bar. I mean, you can see the setup was starting here as everything was starting to cave, which was the bar before, and then it started actuating itself right at the beginning of it. And I was posting this one on the Skype chat as well. Likewise, produced the same thing again here, did the exact same thing as it was pretty much trading in a consolidated range. But with no steel reset, I'm not really excited about any of the buy situations that are developing along this entire run. And then you continue to get more of the same. Again, breakout right there. You could have taken that one as well. So this led to conversation I was having with a trader about this one. It wanted to go long this setup, which the argument is that, well, that's a bull snake. Well, no, it's not a bull snake. It would have been a bull snake if we had had steel cross below red and then try and come back above. That doesn't happen in any way, shape, or form. And when you're making new lows with all these no oranges, nothing had changed there. We didn't even have the orange moving below. So not even close. Now, even when this one comes, this is a long short, but with no steel reset, you're barely looking for a 23% in this particular case. So as soon as these two come together like this and then you get a rejection, oh my goodness, if you're not jumping on that from a short standpoint, you're saying, oh, but I don't have a clear DLC spread or whatever. It's like, yeah, but what you've got is a continuation downturn where the two of them met and were rejected with the rising orange. And next bar, boom, the orange is over green. You know that that's ended. All right, so let's just look at that. From 32 to 22. It's a fast 10 points in 4 bars. And it just doesn't get any cleaner than that kind of setup when you're looking at this kind of a duration of orange movement. Now, you end up with another buy that develops right around here off the white candles. And in this particular case, you got a decent shakeout, but really not until you're about the 23% where you get above the negative 13 that I would say, okay, hey, this might have a little bit more leg, especially since the orange didn't immediately pop up. I usually look for that first pop-up of orange after I've entered it to see if this thing's going to have any sustaining capabilities. You had the steel all the way above 13.5 with the suggestion that, like it's coming from underneath, which is helpful. But once it gets below the positive 7 right there after turn back down, then you got to be like, okay, I better have my cross of green above cyan. In which case this did. It's still consolidated for a few bars, but at least it was a decent buy signal and did pretty well. despite not having a complete reset. Now here we get the steel complete reset at this particular point with cyan under red. So you're like, okay, but still produce that same crossover with the steel. Now in this particular case, you got green slightly above, but what you're looking for is the potential of that rollover. Now this could still move slightly to the higher. And the warning sign on this one was we had moved back above that key daily, which I was talking about, which we had up here, was at the 35 range. And my warning to people was, hey, above that level, you've got to expect potentially more bullish. So if you don't see short activity where you're like really strong now, ideally you would like to see this move above zero really quick. It just consolidated for the longest period, which is pretty much the warning sign right there that things were about to get stronger, and the cyan kept staying below red, and sure enough that led to the breakout moves. And then it was just a matter of waiting for any defined signal. What I love to look for after these kind of runs is, you know, you're going to get a little teeny fade going through there. It's that second bullish move. You're looking for a lower shakeout. As soon as it came in, started right there at that crossover with the green below the red, the cyan was rising. I'm betting on a break of my ABM that it's going to continue. Now that's premature. Yes, you can wait until you get the full DOC spread, happen another bar later. Okay. But point being is, it's like taking advantage of this right around that previous key algo level at 2666. I've got a very limited range that I have to create for a stop just above the 100% right there. And you can see the level of production from that one, because I was in around that 66 range, and we ended, even if you just want to wait until you get to a dip of there, you're at 50. That's 16 more points added to it. At this point, you know, up almost 100 points on the day. And then we came down, ended up with the decent buy signals. Again, much improved shakeout. You can see we're well above that negative 13.5 buyer's line. This one right over here that you can see in the chartreuse, or I think they call it light evergreen or something like that. But led to a very nice pump run as the orange stayed below, and then right as you got the crossover of it, it was right at this key particular point. I moved the stop just below the low right here of the previous bar, because I'm, you know, kind of saying, okay, that's a little sketchy. A nice rise in red, but fortunately at that point, green crossed above and continued breakout. Followed through, and then we ended up with the strong cross, the same signal over and over, right at the peak. This one, even, I mean, it doesn't get any more textbook than this description of it. Right there, where you've got, I gotta change the color again. Espiache, as we say here. Green crosses below, orange crosses below, steel crosses below orange and cyan, all at the same time. Bingo. There you have it. In this particular case, where are we at? 2670, and we break down quite significantly until you get the cross right here as your first warning. And then I look usually for the steel getting above orange, so right around there at 55 for me is a point to cover. So from 70 to 55, you know, again, pretty straightforward. Another 15, locked and loaded. I mean, this day just, it never ended. It's like I almost didn't even want to leave to go do anything, because there were too many opportunities happening. Again, the clean buy signals, and again, for me, a clean buy signal, you've got to have that orange dip below the red, or at a minimum, you got to have that strong green cross where red rising in that is at least taking place on a pivot. If it's only dipped below the green and you've got a good move above a 23%, because then those can catch. You can sometimes get that when you're, particularly if you're right around the 50% line. When you're down below the 23, you want to have really solid configuration, particularly as your shakeout is nearing positive, is always helpful. And that led to just a fantastic spark rally. Again, here's that first high, so I was looking for a second high on lower shakeout. That didn't happen. So waiting some more. Oh, third high, this time lower shakeout, but it's not really a third high. This would be the second high. Now I'm looking for DOC spread or any of those crossover configurations. Didn't get the dip of orange in that from below to have the green cross from above. That shows a little less momentum at this point, so you have to wait for the DOC. So you see that distinction between not having the crossovers. It matters because it's a momentum situation. So taking the short from that peak, which is what we just had talked about, 92. Well, here we are down at 74. So you tell me, long video, but it is important to know how powerful this is because it's days like these that can set up an entire year in just a day. And we've had like too many of these. It's fantastic. There's so many of these giant bar ranges because the market valuation where it is so high that when people get a little bit scared, we get some phenomenal movement. So ever since October, we've just had some fantastic opportunities. So hopefully you're taking advantage of all those and you keep following on the Skype chat, and that is really exciting stuff. So as always, trade well and have a great weekend. We'll talk later.